Problems for Countrywide being overblown because some want to scapegoat that particular company for the entire mortgage mess. This is a question that's important to ask.
Well, let's ask our panel, including this time Jim Pettakakis from U.S. News and World Report. Let's start with you, Jim. What do you think? Is this something that's going to spread, or is it just specific to Countrywide? Countrywide, by the way, seems to be the only company that we've noticed that's really being hit today.
Well, first let me say that it's really amazing that here's a country that was, allegedly sticking it to its customers and still losing money. That's quite a duo, and it's quite a trick to pull off. But listen, if this does spread to other companies, and right now, I mean, obviously, as you said, it's the flailing bird, Liz, and they're all going to focus on Countrywide. I think what you're liable to see, at least out of Washington D.C., where I'm at, is a Sarbanes-Oxley for the housing industry, for the credit industry. I think you're going to see a huge legislative reaction in the wake of all these scandals. And my fears really goes beyond what's going to happen to this company, but what's going to happen to all these lending practices. It might be more difficult in the future to get a loan because there'll be such a regulatory layer placed on all this stuff that it's actually going to hurt the housing and lending industry going forward over the long term.
Mike, is it fair to make Countrywide the Enron of the housing industry? Because, of course, Sarbanes-Oxley came about because of that.
And we saw the after effects with Sarbanes-Oxley. It got a lot more difficult for many companies to, conform to, having to do their filings, etc. You said it. I mean, the flailing bird. And Jim is right, too. I think, actually, Peter Schiff's prediction could come true about a contraction, a serious contraction in credit to consumers if we see this sort of regulatory environment come down in a very onerous way. And it could, because you have the finger pointing going on now, right? They start with Countrywide. If there is wrongdoing found there, or if there's a sense that there was wrongdoing or unscrupulous lending practices, it's going to spread. You know it. You had Schumer piping into the mix, Senator Schumer piping into it recently. So I think there's a danger here that we get into a very heavy regulatory environment, and that will impact, more than anything else, the implosion in the housing market. That'll impact.
Peter, is it possible that politicians will overshoot on this?
Well, politicians always make things worse. But we got to look to the reason why Countrywide was able to do what it did. The real cause of these problems was the Federal Reserve. It was Alan Greenspan that created the monetary policy that made this real estate bubble possible, that facilitated all these crazy lending. And I was criticizing this at the time he was doing it. So this was a predictable result of irresponsible monetary policy. And what the Fed is doing right now by cutting interest rates, it's just as irresponsible, and they are creating a lot more damage to this economy.
You're right, Peter. In fact, a couple of years ago, you were saying that exact thing, which leads me, Nicole, to ask you, you got to figure Alan Greenspan is kicking himself and saying, I should, because in his heart, he was a little concerned about the housing situation, but he didn't take it that seriously, or seriously enough, perhaps?
I mean, you could definitely argue that, and I think that a lot of people have, that Greenspan did have that knowledge beforehand, and he could have done something a little more proactive to actually prevent this whole mess from happening.
Come on, just blame him, will you?
No, it's not just preventing it. He created it. He caused it.
No, Peter, look, we're forgetting about one thing. Remember Alan Greenspan spoke about the conundrum, which basically said throughout the world there was this huge glut of savings, which was flowing throughout financial markets. The Fed, in fact, was trying to raise interest rates. Long-term rates stay down because of the fact that of these global saving flows. They came into our economy. Money was freely available. Credit was demanded. Banks provided the credit. It's a function of expanding wealth, free market, expanding wealth in the global economy. It is not an evil thing or a sinister thing. It's the way it is.
Quickly, Peter, quickly.
Alan Greenspan is the one that lowered interest rates down to 1% in the first place and left
to prevent a deflationary spiral. Come on.
He should have allowed that recession to run its course. It's now going to be a lot worse because of what he did.
All right,
we should have bitten the bullet when we had a chance.
We got to leave it.